Welcome to the Capital Spreads Weekly Update. Today is Thursday, the 17th of June 2010. Well, it's been quite a busy week so far, but the one piece of news dominating all others is that of BP and the unprecedented environmental disaster we've had off the coast of the United States and the record amounts it will cost BP to clean up the mess. Other than that, we've had a mixed bag of results of the last week or so. For example, on Friday we had worse than expected US retail sales figures come out. We've also had a downgrade of Spain. However, since then we've had better than expected inflation figures come out of the UK, and most recently we've had a bond auction out of Spain which has shown that demand was much greater than expected. This gave a boost to both the Eurozone as well as the Euro currency. Those following the UK economy will know that we've got a budget statement coming out on the 22nd of June. Many hints have been thrown about what's going to actually be mentioned in the budget, but most expected will be an increase in taxes as well as substantial cuts across all government sectors. So looking at the situation so far, BP's trading around 363. It's up about 25 pence on the day. This was after they announced a deal with the US government whereby they're going to set aside a $20 billion fund to compensate all those that have been affected by the disaster off the US coast. This is a much better situation than BP were in just even a week ago, where they were looking at a financial black hole with unlimited potential losses and liabilities. BP has come off a high of 650 over the last few weeks. It's in a strong downtrend at the moment. It found a bit of support around the 340 level, a level it last hit back in January 2003. If BP is indeed through the worst of it and they are now starting to recover, you could possibly see BP ranging between around 340 and about 450. However, the oil well that they're trying to manage and cap won't actually be capped until August this year, and if that is the case, the situation could easily turn and become worse again anytime soon. The FTSE so far is trading around 5270. It's up about 40 points in the day. This is after it bounced off the 4950 level to 5000 level I mentioned last week, and it's been in an uptrend since. On the upside, it bounced off the 5300 level. However, the uptrend is still in place and it could certainly go higher. We're looking at a possible target around 5500 for the FTSE. In terms of the FX markets, the dollar seems to now start to become out of favour again, as other people are looking at the more riskier currencies as confidence in the economic and financial markets returns. As a result of that, both sterling dollar and euro dollar have had strong gains over the last few days or so. Gold also seems to be on the way up. It's now trading around 1248. Gold's been in an uptrend over the last few months or so, and that trend hasn't been broken. If it currently continues at its pace, it could certainly hit the 1252 target hit just a few weeks ago, which was an all-time high for gold. Long-term people are looking and talking at gold reaching at around $1,500, even $2,000. In terms of the week going forward, we don't have much economic data over the next few days or so. However, towards the middle of next week, we've got a number of key figures which could certainly move the market. The first will be the emergency UK budget statement coming out on Tuesday the 22nd. And then on the 23rd of June, we've got the Bank of England minutes coming out, as well as the FOMC interest rate decision at the US. Now, the US interest rate decision is expected to show that the interest rates will remain at record lows for a prolonged period of time, and we're expecting a similar theme to come out the Bank of England minutes. However, any deviation from this, you can expect quite large and substantial moves in the financial markets. In terms of client activity is a mixture of both long-term positions and short-term fading of large moves we've had in the financial markets. For example, we've had many of our clients now starting to short the index markets around the world. For example, they short the FTSE, the DAX, the Dow, as well as the S&P, believing that the up move we've had over the last few days and the last week or so has been overdone, and we could possibly see a correction from here. However, they continue to maintain long positions in both gold and oil. Positions they've had for many months now, as well as they're holding long positions in both sterling dollar and US dollar. In terms of the theme of the week, I would say the theme of the week would be pretty much a continuation of a theme we've had of the last week or so, which is the uncertainty we've had in the financial markets. This is off the fact that we're getting mixed economic data out of many of the countries around the world. We have, for example, we'll have good news one day, bad news on the other, and this is giving an uncertain and unexpected view in terms of where the markets will go from here. I expect this view and this uncertainty to continue at least for the foreseeable future, and it will make forecasting a lot more difficult. That's it for now. If you have any more feedback, it's as usual, it's media@capitalspreads.com.